Hey traders, Shane from Global Market Trader. Welcome back to part 2 of our Trading the Stochastic with Success. Hope you enjoy this video walkthrough. To sell and buy the 80-20 line, then you'll get a lot of false signals. Now obviously this is showing some pretty good setups and trades, but you can see here that as we start to push above the 80 line, we're getting a potential sell there, a sell there, a sell there, and none of those sell opportunities actually work. So we shouldn't be using this stochastic in isolation. We need another confirming tool, either the RSI, or to use a break of a trend line or some other indicator to potentially validate a trade. So the other way in which traders use the stochastic is they use what we call the percentage D. Now the percentage D is really just a 5-period simple moving average, and that's used to really slow the stochastic down, but it's also used by traders as a signal, an early signal to get into and out of trades. So some traders use that across of the K on the 5-period as a potential indication to get into the market. So you can see here that the stochastic crosses the percent K crosses the percent D at an earlier rate than it does cross the 80 level. So that gets you in a lot quicker. So it's more of an aggressive way to get into the market. But again, just reiterating there that you don't want to really be using that in isolation. You want another confirmation to have to get you into trades, because alone it'll give you a lot of false signals. So that is the percentage D line. As I said, it's a 5-period simple moving average and has been used before as a signal line as well. So as we move through the chart, you see here that this close here, obviously that worked well. It's showing good negative momentum or bearish momentum to the downside. We start to flatten out. So the third type of trade setup that we're looking for, alright traders, the last strategy used for our stochastic is picking up potential divergence in the market. So what we've got here is you see that the price is making higher highs and just a series, and gets a little bit of a double top there, but on our stochastic we're actually starting to slowly slip below that 80 line. You can see that the stochastic's starting to come off, and we've got that bearish divergence there, so price is making a higher high, but that's not reflected in our stochastic. So that's giving us a tell in the market that we've potentially got a nice sell opportunity, and we do get that triggers there, pushes down. It's not a huge move, but it just gives you a potential indication that we've got some divergence. And again here we see price making a double bottom, but we're getting some bullish divergence there as well. So you see there that our stochastic again just starting to push up, and then we get a nice little rally there. So an opportunity for you to look at the 3 types of potential strategies for using the stochastic, but as I mentioned before, and I'll reiterate again, should really be used in combination with another indicator, some type of confirmation tool. So whether that's a break of a trend line, a second or third indicator, but something to validate and confirm the trade that's setting up. So thank you for your time, everybody. Hope you enjoyed the quick session on stochastics, and I look forward to our next training video. Cheers.